DJ Clear's massive birthday bash.
We're getting set for this big one. It's Lushing Boss, DJ Clear's big massive birthday bash. It's happening match Friday 13th at Whispers Nightclub, Soufriere. And Saturday 14th upstairs to Castries Market. Tickets is available right now at Whispers Bar in Soufriere. And Steve Barbershop and DJ Rambo's Place in Castries.
$15 for the tickets and $20 at the door. You will be winning $500 in cash and prize. DJ Cleo's birthday bash. Get your tickets now. Your big DJ.
DJ Bucker, DJ Stormy,
DJ Tallboy, DJ Leroy, DJ Baby Sharm, DJ Fat Boy, DJ Remo, and the birthday man, DJ Cleo's. Get your tickets now.
The doors open at 8 p.m. It's DJ Clear's birthday bash. This is one you can't afford to miss.
Sunday, March 29th, 2026. The all-inclusive brunch. From you step in, mimosas upon entry. No waiting, just pour up. There will be lobster and plenty seafood. Everybody eating. Temperature on the inside will be turned up with DJ Innocent, DJ Bashi, and DJ Irv. Non-stop vibes. Hello Spring. Your all-inclusive $75 brunch. Dress in your spring colors and bring that big energy. 193 Vernon Avenue, Brooklyn, New York, March 29th, 2026.
Love how we party, love how we fet. Pour out the bounty, everything's set. Celebrate good friends and more. Let me see, tout moon, farewell. Love how the twin peaks rise to the top. Bounty, treasure, right non-stop. We love with spirit and we all have fun. Love that loose and rum.
Perfectly blended, smooth, the rum of the people. Experience the 6 flavors of Bounty Rum, the spirit of St. Lucia.
Get pain relief fast with Frances Rub.
When the days get tough, rub it. Having back pains, rub it. The dog not well, rub it. COVID on you, rub it. If you have 4AD, rub it. For proper circulation, rub it. Stroke have you on a side, rub it. For all problems in life, rub it with Frances Rub. Or call 713-4162 or 489-3421. Nothing beats a good old Frances Rub. Located in the Vendors Arcade, booth 27B.
And now in VA4 on Girodi Street next to the post office.
Hi, this is Aaron Henry, and I am inviting you to St. Lucia's National Day Committee Inc. Prayer Breakfast on Saturday, April the 18th, 2026. Hey, listen, I want you to come with a heart of prayer as we lift up the name of Jesus Christ. Hey, Prayer Breakfast 2026 is going to be epic. See you there. Boom.
In times of loss and remembrance, honor the lives of your loved ones with dignity and grace. Welcome to Obituaries on Watch Radio, where we specialize in crafting heartfelt and personalized obituaries to celebrate the legacy of those who have passed on. Our team of compassionate writers understand the importance of capturing the essence of a life well lived with attention to detail and sensitivity. We work closely with you to create a tribute that reflects the unique spirit and cherished memories of your loved ones. At Watch Radio, we offer a range of obituary services from traditional notices to custom written tributes, whether in print, online, radio, and or video. Our words serve as a lasting tribute to those who have touched our lives and have left an indelible mark on our hearts. Let us help you honor the memory of your loved one with a beautifully crafted obituary that captures the essence of their life and legacy. Contact us today. Learn more about our services and how we can assist you during this difficult time. Obituaries on Watch Radio, where memories are honored and legacies are celebrated, because every life deserves to be remembered. Call 347-392-8282. That's 347-392-8282.
Sunday, March 29th, 2026. The all-inclusive brunch. From you step in, mimosas upon entry. No waiting, just pour up. There will be lobster and plenty seafood. Everybody eating. Temperature on the inside will be turned up with DJ Innocent, DJ Bashi, and DJ Irv. Non-stop vibes. Hello, Spring. Your all-inclusive $75 brunch. Dress in your spring colors and bring that big energy. 193 Vernon Avenue, Brooklyn, New York, March 29th, 2026.
DJ Clear's massive birthday bash.
We're getting set for this big one. It's Lushing Boss, DJ Clear's big massive birthday bash. It's happening match Friday 13th at Whispers Nightclub, Soufriere. And Saturday 14th upstairs to Castries Market. Tickets is available right now at Whispers Bar in Soufriere. And Steve Barber Show and DJ Rambo's Place in Castries.
$15 for the tickets and $20 at the door. You will be winning $500 in cash and prize. DJ Cleo's birthday bash. Get your tickets now. Your big DJ. DJ Bucker. DJ Stormy.
DJ Tallboy, DJ Leroy, DJ Baby Charm, DJ Fat Boy, DJ Remo, and the birthday man, DJ Cleo's. Get your tickets now.
The doors open at 8 p.m. It's DJ Clear's birthday bash. This is one you can't afford to miss.
Good night. Welcome to another episode of Bouyon. Of course, I'm your guy, PhD. And tonight, I've had my dear friend with me. We're going to talk a little bit about taxes. We're going to be talking about financial health. We're going to be talking about how to accumulate wealth and all of that good stuff. I want to welcome you, my friend Wayne. Welcome to the Bouyon Talkshow. How are you today, buddy?
I'm doing great, Peter. Always nice to be back.
Yeah, it's nice to have you too, man. When I sit next to you, I feel like a millionaire, because they say the people you rub shoulders with, that's what you're going to become, right? So I'm hoping some of your millions will rub off on me, brother. I want to say good night to everybody joining. I want to encourage you guys to like and share the page, tell a friend that What Really is on PhD is here. And we're talking about taxes, we're talking about finances, we're talking about managing your wealth, managing your finances. With that, welcome again to the Bouyon Talk Show. For those who may not know who you are, please tell us a little bit about yourself and what you do, a little about what you do as a CPA.
Well, by profession, I'm an accountant. I'm a licensed certified public accountant. Licensed in New York, New Jersey, Florida. I'm also a chartered financial analyst, which means I specialize or I undertook a course of study, just, working, understanding, and just creating the foundation of knowledge in wealth management. So being an accountant and a financial analyst, what I do is I do basically three things. I help individual people with their taxes, with their bookkeeping. I help people just understand their finances and just grow wealth over time. Okay, and the last thing I do is I help people sort of create businesses. So, you could wrap what I do, within these three topics.
Okay, cool. So taxes, financial management, and help them set up the businesses, right?
That's correct.
And grow it as well.
and grow it.
Okay, when it comes to taxes and stuff, people are so overwhelmed. Why do you think tax creates so much anxiety for individuals and families?
Well, I think, in the simplest terms, you'd say somebody's taking something from them. Pretty much the government.
Right.
So here comes, the biggest aspect of the negative or the adverse reaction to taxes is that, hey, I'm working so hard, and then, hey, the government is coming and sort of taking my money. Okay, and obviously, the more money you make, the more taxes they actually take. But however, that is how the government sort of finance, the cities, they finance whatever services you actually use. So that's the basis for taxes. Taxes, they're overly complex sometimes when you sort of delve into like businesses and you sort of delve in what you call tax strategy, where people sort of use the tax code to their advantage to sort of generate wealth.
Wow, tax strategy. Wow. Yeah. You need to teach me some of that, brother. Just let me, Miriam, we see you once a good night to you. Thank you. She said good night. And people, I want to encourage you guys you will never have a final opportunity to ask any tax questions you have now. Because, you go somewhere else and you have to pay, right? Now you can get a free consult, right?
100%. And what we're doing here is just trying to, just shed the light and have people call in, ask questions, and empower themselves through information. So if you have a question, it could be taxes, it could be personal finances, it could be investing, it could be buying a house, anything that's been on your mind for a while and you're trying to sort of, hey, can I speak to an expert? Can I speak to someone that's just going to keep it real with me and give me the feedback? Then 100% feel free to, ask your questions.
Cool, thank you so much. I am Donna, the table I see, I want to say good night to you. Chelsea, my niece I see, I want to say good night to you. Sabina, I see, I want to say good night to you. Jennifer, we want to say good night to you. We see you guys. Thank you so much for joining the Bouyon Talkshow. Don't forget to tune to Watch Radio NYC. I am your host, Peter Lee, and tonight we have with us our usual guests who always talk to us about taxes, Wayne Daniel, CPA, very, very qualified in that area. Wayne, in the tax season, and what are some of the biggest mistakes that people make when they file the taxes?
Well, I'd say, biggest mistakes generally, and we got to sort of get a little bit in where we are right now. We're in the age of AI, okay? We're in the age of technology. So what that means is that information sort of flows from business to government to the IRS to the agencies. And one of the mistakes people generally make is that they underreport. Now, a few years ago, that would have been something you could underreport and get away with it. But right now, with technology and AI, everything is pretty much instant. So, for instance, a lot of my clients, they work and they don't get paid for a W-2, they get paid sort of for what you call a 1099. So they would file and they would underreport or not declare it. But if I try and file a tax return, I get a rejection immediately now. Because right now, in seconds or milliseconds, the system could pretty much go pick up your tax ID, pick up your social, hit the IRS page, send back a rejection.
When you say underreport, what does that mean?
Underreport just means not reporting money you've earned and that's recorded in the system, or not reporting the right amount.
So if I make, say 100K for the year.
I say I make 10.
And you say, and yeah.
Yes, because obviously people know if they sort of report, the more they report, is the more they pay. The next thing that, the biggest, I don't like to call them mistakes. I just want to call them things that, that they attempt to do sometimes, which in the current environment with the current administration and what's going on is where they claim people are not necessarily relatives. And now there's been a drive in the last year more so for tax accountants now to sort of document, hey, is that child really in the US? Is that child really going to school here? Okay, so there's a crackdown that's, it's emanating from whatever's going on in the bigger immigration story now. So again, that is just something people who historically claim like nephews and nieces and so on is becoming more a challenge now, and then it's becoming something that the authorities seem to be cracking down on more.
I think I know the answer you're going to give us here, but I want to ask it because I want people to hear what your response is to that. A lot of times we have relatives or children who were born in the US, but they've moved back home, right? So they have their parents home, and the parents would ask a relative here to fight for that child so they can get some cash back. Is that something that's advisable that you do?
Well, I mean, that was something before, in like just a few years ago. It wasn't necessarily monitored, and it didn't really put any strong restrictions around it. But through the years, again, for immigration sort of for policy, now it's a no-no. Okay, so if you do it at your own risk, understanding that the rules are very basic. The child must be in the US, irrespective of whether they're a citizen or not. Okay, they must be within your care, and you must provide support for them. So, I mean, these are the rules that, that are in place currently. So if you claim for a relative that's, in essence, not necessarily a relative, or maybe somebody that's not in the country, just understand there's a potential risk of being sort of, penalized or being under audit.
Let me ask this question. So I have a child, or let's say it's my child, make it simpler. My child, so I have a child with a young lady who moved back to St. Lucia. I am responsible for my child. I'm taking care of my child. So I'm sending money every month, doing all the things that I need to do. But the child does not reside in the US. Can I put that child on my taxes?
Technically, no.
Technically
no, because we have to check off on one question. You will have to sign now a declaration saying that the child is in the US. So now, the child may take a trip in the US, the child may come here for medical care, so you might have an avenue to sort of, substantiate that. Mm-hmm. But technically, the child is out of the US for the entire year. Based on current procedures and laws, it's illegal to claim them as a qualifying child, and that's a right terminology.
Yeah. So that's can be taken as fraud.
Well, it is fraud because it's pretty much against the rules.
Okay. All right. Thank you for that, Wayne. Natalie, we want to say good night to you. Thank you so much. So Wayne, what documents should people make sure they have when they're ready or just before they file their taxes? When you know somebody that is mad?
No. Natalie is a fan of mine, a big fan of mine.
Ah, hi Natalie. Talk to us, Wayne. May I just ask, what documents should people make sure they have when ready or before filing the taxes?
Well, use, your W-2, which is standard. If you have any sort of dividends, interest, any sort of investment document that you received in the mail. If you have any what you call 1099s, which are pretty much informational filings. If you have a business, just a good grab of your income and your expenses. And that's it. And your ID, your social security, if you that's it. That's it.
Okay, cool. Okay. Many people wait until the last minute. when is the best time to start preparing? Because a lot of us wait until we get that W-2 or that 1099.
Well, I think, let's sort of put it in. Let us put filers into different categories, because if you're what I'm saying, the most common, which is a regular employee, then you could wait for last minute. Okay, there's nothing. There's nothing much to that, okay? Because you have one document, you can wait for the last minute.
Right.
If you're in a what you call your tax return a little bit more complicated, meaning that you have investments, you have stocks, you have bonds. Then obviously you got to prep a little bit earlier. If you have a business, definitely by let's say October, you're supposed to start putting your documents together to sort of avoid having to file an extension.
Okay, I got you. Jennifer Charles asked a question. She said, why is it that when you receive an employment benefit, you end up owing the states even when they have deducted a percentage upfront while receiving the benefits?
Well, the question is, you may end up owing them. It's really a matter of whether they've, to sort of use your terminology, deducted the right amount. They might deduct a percentage, because when you file for unemployment, you normally tell them how much to sort of hold back. That doesn't mean it's the right amount. And sometimes the system have a default, might say 10% as a guide. But your taxes are actually determined when you file in total. because it's based, your tax bracket is progressive. What I mean by that is, as you go through different income levels, for instance, $20,000, it may be taxed at 5%. Now you might move into some like 30,000, that might be 11%. Okay, as you move into let's say 50, that might be 15%. So the only time your true taxes are determined is when you file, because right now your income for the entire period can be placed on one form, including unemployment, and that determines your taxable rate. And you see that often with people that might have 3 or 4 or 5 jobs within one year. On each job, they're sort of paying within a slower tax bracket. But once you add 5 jobs together, they're at $80,000. Now they were paying across each individual job 10%, but really they're in a 20% bracket. So I'm hoping that sort of clarifies Jennifer's question.
I think that makes a lot of sense. What are some of the common tax deductions or credits people often miss?
The common one, I don't think most people miss it, is the dependents. Okay. What people miss tend to be things that, like for instance, the educational tax credit, if they're going back to school, or they sort of paying tuition. It might be something that's less federal, more state, but depending on the state you live in, and if you have a home, you might get an extra credit for saving, like in a what you call a 529 plan, or by paying real estate taxes. If for some states you sort of get a rebate. So the nuances are really at the state level. At the federal, what you may miss, you tend to miss more when you have a business if you're not sure what you're doing. But for the regular folks, the main credits you have is a dependent. Okay, you have what you call the earned income credit, and that is the one that people miss sometimes, because it's pretty much a credit that you get based on the amount of money you make. So if when you file, there's a determination by, let's say, the government that you haven't made enough to sustain your living, then you get a credit. In other words, you get money sent to you to sort of bring you up to what they call a particular standard of living.
I got you. And Jennifer just asked, so what is deducted is an estimate, and that's what she's asking.
That is 100%. It's just an estimate. It's just now it could be an estimate that's over, and you're going to get a refund. But it's going to be an underestimation also. So maybe Jennifer, maybe you sort of fell in the underestimate.
Yeah. So then she owes the government more money.
Unfortunately, Jennifer.
That's what happens, right? If you overestimate, then you get money.
Yes.
If you underestimate, then okay, then you owe the government. So because I want to talk a little bit about, because we don't have a lot of time, and I was not enough time to cover all of the things we want to talk about. But I want to talk a little bit about financial health and planning and stuff. But is there anything in terms of taxes that you want to share? I know it's the tax season. Some people have already filed the taxes and stuff, but I know it's the season now. What advice you want to give to persons that are getting ready or who have not filed the taxes yet? What advice you want to give to them?
What I'd say I break it down into 3 things. Okay, just file your taxes. Especially if you live in New York City, file your taxes. Avoid unnecessary letters, unnecessary reminders. And just be in compliance. Okay, it's less stress. So I'd say number 1, just file. Number 2, think through making or taking that opportunity to sort of meet with a qualified sort of tax accountant to really think about your goals, your future, and how you want to sort of position yourself 10 years from now, and sort of speak to someone that knows how they could help you financially, financial planning, financial literacy, because the key to wealth is having the right people supporting your growth and supporting your development. Okay, so I would say that would be the actual second thing. And the last thing is, just again, I'm going back to the AI stuff. Just try to sort of do your due diligence, make an effort to sort of present all your documentations, and be extremely meticulous in doing that.
A question. So for persons who are not able, or maybe don't have all the documentation ready to file, does the government give them an extension? Is there an extension period that they they can actually request or something?
Yes, there's an extension to file, but not an extension to pay. We have to understand the difference. So for what I call the more complicated clients, normally, or for whatever reason, they might have a situation like maybe, for instance, they had a death in the family, lost a relative, and sometimes that's a process to get all the documentation together. Okay, or you have multiple streams of income. Okay, so there's an extension to say, hey, by April 15th, I'm not ready, but I know how much I have to pay. Or if I'm not sure, pay more. And then file for an extension until October to file the right paperwork. So there's never an extension to pay.
You have to pay. You have to
pay. Whether you extend, as long as you extend, the first thing is how much do you owe. So right now, your partner must still have an estimate of how much you owe, because if you don't estimate the right amount, there don't be penalties and interest for doing that.
Yeah, and there's always interest, right?
So always interest.
Let's talk a little bit about financial health and planning. What does it mean to be financially healthy? What does it look like?
Well, to be financially healthy means, in my mind, a few things. Okay, so let's talk about the basic thing we've heard in just common parlance. You have to have a ready fund. You have to be in a situation when or you lose your job, or there is some sort of adversity in life that requires an influx of money. You're able to sort of do that. Okay, so let's sort of look at it, a rainy day fund. And accommodate that now, you got to be able to sort of meet what you call your basic needs: rent, food, self-care, and so on, comfortably. Okay, so that's what that's one of the actual two pillars of just being financial health. The third one would be now having the capacity to sort of plan for the future. Okay, and what I mean by that, retirement, having leftover. So in other words, what you make, okay, is a little bit more than what you spend, and there is excess to sort of save, to sort of put in a rainy day fund, and also to sort of put away and not touch. So in the simplest sense, it's not a matter of how much money you make. It's pretty much is how much you manage your money, and sometimes how much you manage your expense, and having what I call financial discipline to sort of know where to hang your hat.
That's interesting. So you indicated financial health really relates to how you can cope with if you've lost your job or something, how you're able to manage your paying your bills, right? So in effect, if someone is to save, right, what would you say would be in terms of taking care of themselves? What would you say would be a recommended, maybe not amount of money, but period of time that you should have enough savings to be able to take care of yourself should you lose your job? Like a basic kind of like, is it 3 months? Is it 4 months? Is it,
Well, I mean, we heard about the 3 months rule, trying to have at least 3 months reserve. I say that's a rule of thumb, but I mean, that is relative, right?
Yeah.
It depends on what your expenses are. Okay, so it also agrees. It also is a matter of what industry you are. Are you in an industry where you're going to only be down for 2 or 3 months? Okay, so I guess there are variables. I would say for me, I have 6 months of reserves. If you can, I think 3 months now into this environment is a little bit, you skin and feel nice.
Yeah, you're right, man, because the job market is so hard that you could be out of work for a year plus, so, and I know that much too well. In your experience, what are the top financial habits people should develop and that will improve their financial well-being?
Because I think it's sort of what we talked about. I would say definitely learn how to succeed, learn how to budget, learn how to forget. Okay?
Learn how to forget.
Learn how to forget. Do things financially. Learn how to forget money you have.
I got you.
Okay, so what I mean by that is somebody might be working and they're working for a year, and they're accustomed to a standard of living. They get a raise, and all of a sudden now that raise that they weren't able to live, that they didn't have before, now all of a sudden it just gets swapped into something. Just little techniques like just saving and putting your money away and not touching it. And sometimes unfortunately you must set boundaries with people, with friends, okay? And you must sort of understand to some extent that you're responsible for you. And you must learn how to say no.
Yeah.
Just some basic things that, sometimes might be a little bit challenging, but hide your money. Don't let people know how much money you make, how much you have. Do advertise how much you get when you get the raise, and save your money.
That's really important. You brought two very interesting points there. You spoke about budgeting, yeah, and my question to you about budgeting is how important is it to budget? And if you've been someone who never budgeted before, never created a budget, how do you start that?
Well, I think budgeting is just allocating money towards your needs. And I would say you have three buckets. You have your recurring expenditures, okay, which is your rent, your utilities, etc., your groceries. Okay, so that is sort of bucket number one. Bucket number two would be sort of your short-term needs, saving for something in the short term. So what would fall in that short term? When you look at maybe a year. So for instance, or even a year, hey, my daughter's birthday is coming up, okay, or our anniversary, or we want to take a vacation. So that would sort of fall in that. And now you have your long-term needs, which is maybe buying a house, okay, saving for retirement. So that is budgeting, understanding these pools of money, and understanding that some of them you have to forget. Now, some of them might be a short-term forget, which is like, hey, I'm planning for my anniversary, and others might be just lock it up, throw away the key. In 20 years, I'll go look for it.
Sure, and then when you get there, you realize, wow, I've got so much money there.
Yes. But I know sometimes it's easier said than done. Okay, and we understand that life has challenges, and life has there's a lot of things that's not come your way. Okay, but on reflection, what you realize is that whether you have $100 or 120, the same things always come. And if you could delegate it for 100, okay, you don't necessarily have to have 120 to deal with it. And you must let people know. You must set boundaries for people, for friends, for family. You have to.
I like that, and that's one of the other thing you said. You have to set boundaries for people. Like sometimes people always ask you for money, always ask you for something, and you feel obligated because you wanna help. And you're saying we have to set our boundaries because you don't want to stay broke and take care of somebody, and then when you check yourself, that person builds the mansion, and you're like, wow, boy, that happens all the time, bro.
Yeah, well, it's not even that. Even if you're sort of, someone that like to give back, and you're even in your budget, say, hey, I'm gonna dedicate $100 to help people out. That's fine.
Right.
Okay, but it's about that discipline to say, hey, that is how much I could do. And you can decide where you want to give that $100, every month. That's fine. But what you can't allow it to do is have that need or that drive to help people out, sort of cannibalize on your own personal development. Okay, because these same people, if you don't have tomorrow, you can help yourself, you can help them.
Yeah, that makes sense. And in terms of saving, I think one of the things that I think a lot of us don't learn early in life is how to save. Because a lot of times what we do, when we get paid, we want to save $300. But we know at some point, and you brought up a very interesting point early on, we know at some point we're going to go on our account and take at least $200 or $250 from that $300 we've saved. One of the very important things you said is learn to forget. So if you save, so from my understanding is when you decide to save something, you put your budget down, you say, okay, I'm going to save $50. Don't try to save $300 if you know you're going to go back and take $250. Just save the $50 and forget.
Yes. And, they have certain, certain instruments or certain ways you could just pretty much put money in here that's out of your reach. And, one thing we haven't touched on, but try your best to avoid, if you can, credit card debt. Oh, that's a killer.
Right.
Okay, if it's one thing, sort of
That was my next question.
yeah, I mean, it's a detriment. It's pointless saving if you have credit card debt. Don't save if you have credit card debt.
Pay the debt off.
Pay the debt off.
Okay, and we're going to talk about it a little bit. But let's hear what Sabina has to say on her question. You said, up to what age can parents, claim a college student as a dependent on debt access?
It's 24.
24 years old?
Yes.
Okay.
Assuming they're in college, right? I think that's what Sabina is asking.
Yes. So let's talk a little bit about what advice would you give to someone who wants to get out of debt and take control of their finances? And I know you got into, did you say something else?
No, she just reposted.
Yeah. All right. So when you just talk about credit card debt, and you said if you have credit card debt, it's better you clear that off before you even start saving.
Yes, I mean, you could always have a rainy day fund, okay?
Right.
Because that's just your budget. But I mean, your typical interest rate on a credit card is 30%. Okay, so in other words, what you're doing is that you have that debt on here at 30%. Okay, you're probably paying the minimum payment, and pretty much what you're doing is saving to sort of give it back to a company. So it makes no sense. And so, I mean, if you can, I mean, I know again, we have that need, that just like human need to sort of, consume now what we need. And it's really hard to have that discipline to sort of contain yourself. But credit cards are good in terms of, hey, you could generate points, you could use them as a little bit of an income source. You should pay them right away. And definitely good for emergencies. Okay, but you should really sort of try to sort of pay them off, because the interest rates are just meant to sort of retard your progress.
Thank you for that, Wayne. Thank you so much. Don't forget, guys, you tune to Bouyon. Of course, I am PDD, and with me tonight is Wayne Daniel, CPA. Wayne, let's talk a little bit about the diaspora and community focus. Let's focus a little bit on our community, because we have a lot of people here who kind of maintaining families back home and making sure, people are taken care of. And how can people balance helping the family while maintaining financial stability? That's, I think, a very important point, because so many of us send money back home. How do we balance the two?
Well, again, if you sort of just think of what we've been saying, is budget. The budget is the balance. The budget is what is the plan. Okay, if you fail to plan, you plan to fail, right? So that is the budget. Hey, I have responsibilities. I have my children back home sometimes. I have my family. Yes, so you have a budget. Say, hey, I'm gonna save that amount. I'm gonna send that back home to help mom or to help the kids. Okay, and you have the benefit of an exchange rate that pretty much, for every dollar you send, you're actually sending almost $3 back home, right?
Yeah.
Okay, and again, you must always set boundaries with the people you send. Manage expectations. Okay, because sometimes there's a perception, and I think, we tend to sort of fall trap where people believe if you're in America from home, but you get it good. Contrary to at least my experience, that's hardly ever true. In fact, you get good home better.
You know what I'm saying? and that's a fact.
So you must let them know, hey, where am I? I gotta wake up early. I gotta sort of go to work. It's not as easy as you think, So understand that, and then sort of set boundaries.
Thank you for that, Wayne. And Jennifer just also said, lots of St. Lucians like the idea of susu. What is your feedback on that? And I know what you're going to say about that. I will have that.
Jennifer, that's my idea. That's the worst thing from my vantage point.
Right.
Okay, and I keep on saying it to everybody each time. Once I hear susu, I need to pull my hair out.
No, we don't have, right?
Yeah. So now I will give you sort of my sort of concept on how that it has evolved. Initially, I understand the genesis for susu. Okay, there was a time where there's a community where you have access to sort of banks, and just as a community, you have a challenge saving, you sort of pay into that susu, and as a community, you make 10 payments at 100. When your turn come, you get $1,000. So That I never agreed with, because what that means pretty much is that you're not getting any interest, but at least you're getting back what you put in. Now I've heard SUSUs evolved where the person managing the SUSU now have to get paid. So right now there you pretty much put in money and getting, paying somebody to sort of give you your money back.
Yeah.
How does that make any sort of sense? To me, it makes zero sense. You might as well use the strategy of forget, open an account, drop the money in here, and cut the debit card and apply for it in sort of a year again. That would be a SUSU. At least you're gonna get what you put in plus 0.000%. But you could drink a Corona.
Yeah.
Or that, you know what I'm saying? Or you could at least pay your phone bill. And if you're blessed and you're making money, you could easily put that in what you call now a 3-month CD. And these things pay like 3 to 4%. Okay? And that will help you quite a bit.
All right, I hope that answers your question, John. What he says, also a lot of people go into that thing they call society, like a death benefit. Is it not better to take a life insurance?
Well, I mean, again, all communities have little things that they sort of pull together to sort of help in the terms of when you have a death and so on. And I don't necessarily say, you should not. I rather take the approach of saying, yes, I agree with you that life insurance is, one option. So you can do many things. And then if from a community's perspective, because I'm very familiar with the different Caribbean islands, they have something similar to that. So all of them have some sort of, society where you pay. Again, if you were to ask me as an accountant, I would say yes. You better off taking that money and put in some sort of insurance, or that's going to pay a death benefit. But sometimes too, I understand that we have sort of undocumented people, and sometimes access to these things are not always as practical as documented people. And these social constructs, like a society, they sort of facilitate that. I'd be more concerned about how the integrity of that society, their reputation and so on, and then everything is a sense of measured risk. So if you have that, and again, that is one way you want to sort of have that. So you get somebody die or something, you sort of get some money, and it's reputable and it has a good track record. I would say definitely, but also with Jennifer, okay, I would veer towards the me personally as an accountant would want to put my money somewhere that, for instance, there are some guarantees, at least within sort of what I call the regulatory framework.
That makes a lot of sense, Wayne. For families raising children, how early should parents start teaching kids about money and financial responsibility?
I would say as early as you can, as long as they have the understanding. Okay, you could teach them basic principles that you can always get what you want. That's a principle. You could teach them that very early because they learned it very early.
Sure.
Okay, and that's just one of the pillars of financial discipline. Say, hey, you can get everything you want. Because if your child and sort of grows up in this thing, you believe in that everything they want they could get, their first credit card, they're gonna blow it out.
Yeah.
And then they start falling into the trap of credit card debt. So let me tell you something. Everybody wants to give the children the world. Everybody wants to, look, let me make life for you easier than I had it. I understand that, that instinct to sort of do that, but remember that, experiences can be habit forming.
Yeah.
Experiences could actually, create a mindset. So I would say just starting to sort of, it's more about discipline. No, you cannot have that. No, okay. You don't have to get everything you want. Just that mindset, I would say, is a precursor to some extent for, just having the financial mindset.
Well, thank you, Wayne. Wayne, you deal with businesses, you help businesses grow, you help them shape their finances, you help them cut costs and all of that good stuff. Tell us, we have a lot of members in our community who build businesses, it may be doing a little bit of profit, maybe not too much, but we have our businesses or we have ideas that we want to have businesses. What are some of the tax tips that you can give those businesses?
Well, I mean, I'm always I'm excited about new businesses and small businesses, just because to begin with, the whole tax system of the US is based on giving as much benefits to business owners as possible. So that is always one of the easiest ways to sort of create a tax hedge for you. Okay, and that sort of rewards that entrepreneurial spirit and that entrepreneurial effort. So I would say, because you could deduct things that you probably could not otherwise deduct and have what I call a tenable basis to actually do that. Like maybe you could now deduct your telephone expense, your internet at home. If depending on your business, you might be able to sort of have a home office and sort of deduct that. So what that does, every deduction is what we call a tax hedge. It shelters some of your income from taxes. So yeah, so that is, and again, and as I tell, one of the other tips I have, and I see it all the time because I have a lot of people, I have a lot of small businesses, I see they come to me too late. And by the time they come to me, boy, it's at a point where, and I have maybe about 10 or 12 right now, just in the recent months that came to me. Right now, New York State, I'm saying New York State, is garnishing their wages. It's going to their bank accounts. And 9 out of 10 of them, the same thing. They went to somebody that was doing their taxes for them for cheap. Tell them 150, 250, they get a good deal. Not realizing that, once you go into business, you need a professional. You need somebody that's accredited, someone that's experienced. If you have you never differentiate between, I call them form fillers or tax preparers and accountants. Sometimes they have a misconception that they're all in one, but it's pretty much a difference between a bush doctor and a real doctor. You know what I'm saying? So it's something, if you're going to go into business, you need to have a good accountant. You need to have a good insurance broker, at least in the US. And at some point, you need to get yourself a lawyer. These are the three people you need to have in your corner. Just, insurance to manage your risk, an accountant to sort of, give you strength where you probably might be lacking, and obviously a lawyer just to sort of, give you that overall protection. I mean, and that is just the pillars. If you look at any successful business, anyone at any point that's already successful, I define success as, you sort of be able to sort of scale a company. Okay, now you have a lot of successful, I call them small businesses, or I call them small hustles. Okay, and that's good too. You know what I'm saying? I'm not knocking on a small hustle, obviously. However, I'm saying when we talk about business, we're talking about businesses that could grow, employ people, and so on and so forth. That's technically where I want to bring the hustle to, where you have a business where you're not the main source of labor.
I got you. What is one of the mistakes that small businesses make, business owners make, that they should totally try to avoid in terms of the taxes and so on?
Again, I think one of the common mistakes is, again, small businesses. And again, I don't like necessarily to say it's a mistake. It's just the reality, of here you are to grow a business on unlimited capital, and you don't want to be paying taxes. You're the one, sweat equities in the business and so on. Here comes Uncle Sam with their hands stretched out. Okay, so again, the biggest mistake I see a lot of companies do, a lot of small businesses, is again not having a proper accountant from day one. I'm not saying that because I'm one. I'm just saying that because it's always, for me, a little bit heart-wrenching when 2 years, 3 years, I see they have to give back like 20, 40, 40, and you must find it. Okay, I mean, I had a gentleman, I have went out to him because all he had to do about 5 or 4 years was file one form. One form that would have cost him like maybe $250. He ended up paying 5 years later almost $25,000. And lucky enough, he got me, and I saved him from paying another $50. Wow. Okay, so again, so just again, and I know it's hard to sort of, because it's hard to sort of, if you're a small business, like you want to grow, like why would I give an account of my money when I could buy something and sell it?
Right.
Okay, so it's just that mindset.
Well, it's not a very good one, but let's just say good night to Eleanor. We've seen you. We want to say good night to you. Abigail, we want to say good night. Patsy, we see you. We want to say good night to you. We want to say welcome, guys. Thank you for joining us on Bouyon tonight. And of course, you tune to Watch Radio NYC. I am Peter D, and with me, of course, is the man himself, Mr. Wayne Daniel. Wayne, let's talk a little bit about building wealth. You know, apart from or beyond paying taxes, how can people start to build long-term wealth? I think that's a very important thing.
Well, let's go through some of the things we sort of talked about. Creating a budget, living within your means. Okay, planning, investing, saving. Okay, so what I'm talking about here is behavior. Okay, so creating wealth is all about behavior. Creating wealth is all about setting priorities. Creating wealth is all about decision making. Creating wealth is understanding that your time is a resource. So even creating wealth is, how do I spend that time? Okay, if I spend that time doing things that are, even though I say I want to create wealth and I'm not doing anything that towards that, it's pointless, right? So everything about creating wealth is behavior. So first, okay, you must really genuinely commit yourself to creating wealth. So what I mean by that, okay, I want to create wealth. Okay, are you saving any money? No, you're not serious about creating wealth. Okay, let's talk about credit card debt. Okay, you want to have the new iPhone every time it comes out? You're not serious about creating wealth. Okay, you're serious about creating a perception that you have wealth. Okay, so again, I would say creating wealth is really behavioral. Okay, it's really behavioral. So you must change the mindset. So we're getting out of sort of accounting and saying, hey, everything I'm saying here is all about behavior. It's all about decision making. So if you want to create wealth, you start to maybe even on your YouTube, listen to a couple of people that have made wealth and their podcasts. Open up your mind. So you see, I'm not even going into the money aspect of it, just the exposure, the mindset.
It's really about your discipline and how you think. Jennifer says, why some small businesses only accept cash, no card?
Yeah, I mean, because that's one of, especially again, Jennifer, we go into AI, we go into what has happened in the last years and where digital currency is going. Right now, you have your iPhone, you have your wallet, you have everything in it. Everything now has a trace, and more the authorities to track your money. Okay, but cash, what they say about in the battle, so it's the same thing they say in sort of, there is no trace. So obviously, if you collect cash, it's harder for the government to tell you how much money you make.
Yeah.
So they have more control over doing that. So that is why you're a cash business. But to be honest, I think within a couple of years, you're going to see less and less and less of that because, of course, because there's a push to more and more what you call, just think about it. Before you used to, a couple of years, you're going to go and buy a measure card. Now you can just tap your phone.
Yeah.
Okay? So more and more, everything is being traced.
Yeah.
So they're going to come a point where, I mean, to be honest, I'm behind the ball. I just realized I could have tapped my phone on the ATM now and take money. And I don't need a card.
Yeah.
So in a few years, you think my children will even have a wallet?
Sure, they won't. They won't need, right?
Yeah, they won't have a wallet. What they want to have is a phone.
Yep.
So if they only have is a phone, where are you going to put the cash?
That's somewhere, right?
So eventually, if you sort of realize where society is sort of going now, you the same way you're probably about 10 years from, maybe even less, from having cars that your taxi can pick you up at your home with no driver. Everything is pointing towards no cash.
Yeah.
Okay.
You know, when I want to ask a question of you, because a lot of us, we live from paycheck to paycheck. We don't have a savings. If if our salary is late, we messed up. We don't know, we can't pay our bills, right? If something should happen, or if our employer should give us a check that takes 2-3 days to clear, we are in trouble. But what advice can you give to persons who are living from, which is a lot of us, paycheck to paycheck? How can we earn that financial freedom that most of us are seeking to obtain?
Yes, I mean, again, we could answer that on from multiple perspectives, and this we could do it from a macro level, obviously, because we don't have a case scenario in front of us, because each case scenario would sort of merit a different set of considerations, right?
Yes.
And each, so from a macro level, you're living from paycheck to paycheck. That is fine. That is how most of us started. Okay, but now, if you're living to paycheck, it could be for a number of reasons. Okay, that's where you started. Okay, let's say 5 years, you're still living paycheck to paycheck. Let's talk about that. Okay, so what that means is that whatever the scenario, okay, your decision making needs to be reflected on. Okay, because if you begin to pay paycheck to paycheck, that means maybe you should probably think of developing yourself and probably, get another job. Okay, maybe you're not taking enough.
Yeah.
Okay, it could be that you're spending too much. Okay, are you in a party every weekend? Okay, is it something where, one of the things I sort of learned early in my career is, at one point every weekend I used to go out, and that's my young age before. But after a while, I started to stay home and go because every time I go out, I just spend minimum 150. And I think that is on average what you're spending. Yeah. If you go to a fete, you know what I'm saying? Don't ask for if you have a lady friend. Now you're spending 350.
True.
So if you just cut back on that behavior to just to just, instead of 4 times a month, 3 times a month, now you're saving 350. You multiply that by 10 months, you have 3,005. You multiply that by 10, you know at 45 grand.
You heard the accountant,
okay?
Right?
So that is, people don't understand. If you break money like that out, you understand just by making small sacrifices. And there's always a sacrifice that can be made. There's always a decision that can be altered. Okay? And it mightn't be immediate. I'm not saying you tonight you say here and then no. But you set yourself on a trajectory. If not, you're gonna be back 10 years from now living paycheck to paycheck.
True. Thank you so much, Wade, for being on Bouyon tonight. All good things must come to an end, and so must Bouyon. But before we leave, Wade, I'm going to allow you to do the closing remarks, as well as give us 3 financial tips that we should take away from our discussion tonight.
Well, I guess I say the 3 key our topics we thought about just financial freedom. Okay, do whatever you can to sort of gain financial freedom. Think through your decisions, and whether you got to seek free advice or guidance just by going on YouTube. Okay, but try to sort of modify behavior. The other thing would be seek professional help. Okay, I do free consultations on anything wealth creating. They have free seminars. All over the place. Okay, so and the last thing. Obviously, we're in tax season, so definitely file your taxes and take the opportunity to sort of speak to an accountant on not how to file your taxes, but speak to them on a deeper level on how they could help or they give you advice to sort of create wealth. And if that accountant can tell you that, fire them.
Thank you so much, Louis. Thank you for being on Watch Radio NYC. Don't forget, guys, what we will do, we will be posting more information so you can get in touch with Ray Daniel to talk to you more about if you have any business ideas or even about your taxes right now. Even if you have a tax accountant, you could also get a second opinion. So we will be putting Ray Daniel information out there, and we want to thank you guys so much for joining us. We want to say good night. We want to say thank you, Wayne, man. As usual, it's always a pleasure having you on, my brother. Always a pleasure talking.
Yes, thank you, Peter.
Yes.
To everyone, a good night.
Good night and goodbye. Thank you guys so very much. So Peter said, lot of side chicks. And Jennifer said about is the key to financial freedom. So again, guys, it's just you being disciplined. I think it's one of the most important things that Wayne really stressed on, the discipline of savings and stuff. So that's important. Once again, we want to say good night and see you guys next week. Thank you. Goodbye.